Hello everyone, today we're going to explore some creative ways to cover your down payment and closing costs when buying a home. Yes, you heard it right. There are ways to do this without draining your personal savings. So if you're interested in learning how to navigate this crucial part of the home buying process, stick around. And don't forget, you can find more details in the article linked in the description below. First, let's understand what we're dealing with. Down payment and closing costs are two significant expenses that you're going to encounter when buying a home. And while there are assistance programs available, they often come with income and loan amount limits. So today we're going to discuss some sources you might not have thought of to cover these costs. Starting with the most common source, your personal savings. Funds from your personal bank account must be in the account for at least 60 days before acceptance of your offer. This is known as seasoning your funds. It's important to note that cash on hand or mattress money is not allowed because there's no way to verify where it came from. So large deposits must be explained, especially if they're gift funds from a relative. If you're self-employed, you can use business bank accounts to transfer money to escrow or to your personal bank accounts. However, this should be discussed with your loan officer in advance as it requires careful documentation and proof of ownership. Being self-employed adds many layers of complications when it comes to sourcing and documenting assets and income, so make sure to have a detailed conversation with your loan officer. Gift funds are another source. These can be received from a blood or marriage relative as long as there's no expectation of repayment. The gift needs to be documented on a gift letter, and the best practice for receiving gift funds is to have them wired directly to escrow before closing. This avoids any unnecessary scrutiny and cumbersome documentation. Some retirement plans will allow for a one-time loan for buying a primary residence. So the terms of the home loan assistance from your retirement plan provider will usually dictate whether it can be used for a down payment and or closing costs. So contact your HR department or financial advisor or refer to the details of your specific financial retirement plan and determine if that can be used as an option for a source of funds. If your employer has an assistance program documented in your employee handbook and it's available to all employees of the company, this is acceptable for most lenders as well. The terms of the assistance from your employer will usually dictate whether it can be used for a down payment and or closing cost. If you've got personal property such as precious metals, artwork, a boat, stocks, cryptocurrency, or even another home, using the proceeds from the sale requires that you document the fact that you owned the property in the first place, and you'll need to provide a detailed paper trail showing the sale and deposit of the proceeds into your personal checking or savings account. So do me a favor, if you are going to sell personal items, make sure to discuss with your loan officer first and make sure that when you get the proceeds from the sale of that personal item, that you deposit the exact amount into your bank. The numbers must match, otherwise you run the risk of those funds not being usable. So don't deposit all but like $100 because you wanted walking around money with it. You must put the full amount in so that the numbers match. Very important. Now, money received from a tax refund, insurance claim, or even a lawsuit can also be used. You just need to document how you would a personal property sale. So present the award documentation, receipt of the money, and the deposit the money into your account all need to have a paper trail. And again, make sure the deposit matches the amount that you were awarded, okay? Seller concessions are another great way to potentially lower your cash due at closing. So a seller concession is a credit provided by the seller of a home that's used towards closing cost. So not down payment, but towards closing cost. So while it's not uncommon for a motivated seller to cover some or all of your cost, that really is market dependent. Are we in a seller's market or a buyer's market? What's the strength of your offer? So the takeaway here is make sure that you're leaning on the recommendations of your realtor because they will be able to advise you on whether or not that's available as part of the negotiations. Very important to remember, it's not always going to be possible to get seller concessions. If they happen, great, but if not, we need to have a plan B. Lender credits can also be used to cover closing costs, but again, not a down payment. So this is done by premium pricing the loan, whereby a lender charges a higher interest rate and in exchange for that higher rate are able to offer a credit to lower some of the closing cost. This is not always possible. It depends on the health of the mortgage market with the bond prices, et cetera, et cetera. So just realize that while it's possible, That is very market dependent on how the economy is going, frankly. Cash on hand is another option potentially. That is money that you have in your possession, but it's not yet deposited into a bank or other financial institution. So this money can only really be used if it's first deposited into a bank or financial institution, and then it's seasoned for at least 60 days. So that is going to take some planning ahead. That's why it's important that we have these conversations sooner rather than later. Let's tackle some frequently asked questions. So what is seasoned money? How do you even season funds? So seasoned money means that the funds have been in your account for longer than 2 months. So any balances that have been in your bank account for more than 2 months are considered to be seasoned, and they generally won't question where they came from. Can you borrow money for a down payment? In short version, no. So any money received from a blood or marriage relative must be justified through a gift letter stating that this is a gift and that there are no expectations of repayment. So when do you pay the down payment on a house? So when do you pay closing costs? So the cash to close is due at the closing date. So that is usually made via either a cashier's check or a wire transfer. So cashier's check typically need to be made out into the name of the title company. Wired funds, you need to get the wiring instructions directly from where the wire is going to. Be very careful about wire fraud though. Make sure you're only getting the wiring instructions directly from the horse's mouth. What happens if you can't afford closing costs? So not being able to afford closing costs can be a major problem because you can't get the keys to your house unless they're paid. So there's some options a lender can use if you can't afford closing costs, like adding some of it with a lender credit, possibly with the help of your real estate agent, negotiating for seller concessions. That's typically done by increasing the sales price and then adding that same increase as a seller concession. So there's just some things that can possibly be done, but the earlier we can plan about this, the easier it'll be and the less stressful it'll be. So can you use 401k funds to pay your down payment if you're a first-time home buyer? It all kind of depends on how your 401k plan is set up. So many of them contain a provision for you to be able to take a loan for an early withdrawal for a down payment of a purchase of your first home. You need to make sure to check to see how yours is set up. Is the down payment included in the closing cost? No, those are two separate things. The down payment is going to depend on the loan program. The closing costs are going to be different than the down payment. So both are important. You can generally choose the amount of down payment as long as it's at or above the minimum allowed by the loan program, whereas closing costs you don't really have any control over. Closing costs are separate and additional fees on top of your down payment. So your down payment is the amount that you're paying directly, and you're taking out the purchase price to compute the amount of the loan. So closing costs are a series of fees that covers things like the appraisal, the title piece of this, the funding of an escrow account. There's a lot that goes into the closing cost. What happens if you pay back a gifted down payment? So technically nothing. So that process is between you and the person who gave you the gift. However, the person or people providing those funds must legally state that the amount that they have given is a real gift for which you are not planning on or expected to repaying them. In conclusion, I want to stress the importance of hiring a true professional. You can do your homework, save your money, and do everything right on your side, but if you get stuck with a call center lender, all that preparation could be meaningless. Do not underestimate the value of using a professional to guide you through homeownership decisions. Professional loan officers solve problems for a living, problems that you don't even know exist. So that's all for today, folks. I hope you found this information helpful. Remember, you can find more details in the article linked in the description below. And if you enjoyed the video, please give it a thumbs up, share it, and don't forget to subscribe to the channel for more content like this. Until next time, happy house hunting, and I'll see you in the next video.